Welcome to the report, and here we're looking at the US 30, and things are on track here. We were looking for this as a wave 4 here, and now we're looking for the 5 waves up for wave 5 here. I've put wave 1 here, sort of based on in fact that actually should be here, that's better, in terms of what's happened in the actual index, the cash market. So that's how that pans out. So we're looking for the top of the third wave at the 15,200 here, and that was our target for any long trades above the 15,100. So we can expect a wave 4 to pull back to the wave 4 of one lesser degree through here, and then wave 5 up into 1530 to 40 there, because the extension was in wave 3. That means that wave 5 will be roughly the distance of wave 1 there. Take that with a pinch of salt, but it does give you some idea. The S&P 500, a little bit more importantly, is the strange number here, the 1650, which I class as a medium level, and we should see some sort of corrective pattern move in across this as well. So this wave 1 could be taken from here. If we're looking at the cash, I've just put it here to make it visually easier, but the 1, the A and the B and the C here for 2. The third wave up, which may not be finished just yet. Normally when a price moves up above the number 50 here, then 56 is a number that should be viewed as a possible topping scenario there for that. So look, the arrival, the reaction, the first high above the level, and then a larger correction across this point through here. So we do have another session for the upside there, which we were looking at Wednesday in US, which would create the high point for Australia at that time with its indices. The European markets, I'll just pop back here one second because of, let me just have a look. The banks, Morgan's, we've been looking at this pattern here on the daily chart here as corrective, and we're looking for the top to be taken out through here. In some banks that's been the case. This one not the case just yet, but it will. Of course, in this particular case here, we're looking at 50 here, so we'll be seeing a 5-wave structure move to the upside, and then a larger correction across the 50 there for that. Other banks, let me just have a little look here. BAC here is obviously it's pushed higher than its previous high here, but this is still pushing to the upside through here. The other day we're looking at 13 here, major trading level being a part of it there, but this has still got further to push here. There's still space here, and obviously that would reflect back into UK and European and Asian banks as well at that particular point there. So staying long in banks is the go. The European indices as well. It's just the DAX here. I'm just a bit more into the UK one here at the moment. In the bigger picture coming back here, just bear with me a second. Okay, this is the chart we've been looking at through here. So we've got this 5-wave structure up here for wave 1, and then we're looking for, when we've looked at the US indices, we've called this the top of wave 3 here. So if I just give you a bearing on that, we've put wave 3 here and wave 4 here, and we're looking for little 5 waves to go and complete that. But I think there's a reasonable case for an extension in wave 3 here, and that would read out as 1 and 2 to here, then 5-wave structure up to 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 to here. So to here. So basically 1, 2, 3, 4, and then 5 would be 1, 2, 3, 4, and 5 to here for the top of the third, the fourth here. Because if it was going to be this 4th wave here in place here, then I would expect it to be larger than this guy here. So look, there's possibility for that just being the top of the third wave across the 67 there, and 8 is a profit-taking number. It's the first even number before the next whole number, and that will see profit-taking at that point there. So there's support on the 6700 would see further upside there. and of course the FTSE and the Australian market have a reasonable relationship there as well. And when we look at the Australian market, just on the 30-minute chart through here, we understood that this was a corrective wave from yesterday. We just didn't know if this corrective pattern here would actually get grown twice the size in terms of an A, B, and C for here, an A and a B and a C for here, and then the C wave through to here. Look, I've just I've labelled this pretty much in terms of what's been happening across other global markets, in terms of up for 1 here, an A and a B and a C, back for 2 here, and then the third wave up through here. Of course, this could be counted. That could be counted differently as well, but it doesn't really matter at this stage. What the main point is that the US indices have another little leg to go up through there, so as the UK does as well, so we'll be doing the same as well. So we can expect profit taking at resistance at 52.50 here, 50 the midpoint, so the arrival, some sort of reaction here, and eventually finding support on top of the 50, and then a move up into this area here. Now, if we take this as wave 1 here, this means that the distance of wave 5 will be much the same as well. Also here too, the the 72 is normally important, the orange line here, but when you get 272 or 772 together, it just simply carries more weight, and we'll see a larger correction here. Maybe not larger correction, but it will be like, it's just like a magnet. So in one way or another, we'll see it working across this in more ways than one. So making sure that that is a really good tested support before going long above that. So you would trade to that and then exit and wait for support from that point. Let's have a look at commodities. Okay, starting with copper on a 4-hour chart here for base metals. Our first impression of this bounce off the $3 here is the A wave, a nice B wave in 3 waves, and the C wave here in a nice 5 waves, as it should be. Once this is complete here, then we should see this work lower. Okay, now if this is going to work lower through here, then of course that's going to obviously affect the resources as such, and the constituents in the materials sector, of course, are also going to be rolling over from this point here as well. The other point that we just need to be, what we need to see is we need to see a clear 5 waves down. At the moment we can see 1 and 2 and the third one starting. Would still need to see 4 and 5 to come down through here. So for a bear market to confirm itself here, we would need to see the wave 1, wave 2, the wave 3 will probably come down to around here somewhere, the wave 4 and the wave 5, and then we'll get an A and a B and a C back up, and then we'll get the next set of 5 waves to the downside and so on. So that's one way. So we do need to see that 5-wave structure sort of unfold there, or we may be able to pick up some personality traits within the price action to understand that better. The other side to this is that if this is not an A and a B and a C correction, then this move up through here is in 5 waves, so we would have to treat this as wave as I've just made a mistake there with that, so that's okay. We'll just go back to that for a second. This one here. So if this was going to be wave 1 up here, we would be looking for a 50, 60, 1.8 retracement level, which is pretty much back at the 320 here, and then we'd be looking for a stronger move to the upside through there, either as an A and a B and a C wave up there, or the start of a larger impulse wave. So that we don't know either. So our bias at the moment is for this to move down here further, and one of the reasons for that, or two of the reasons for that, is number one, the US dollar is moving higher as expected, and also the Chinese have mentioned mentioned that they're taking a different track in terms of motivating their economies, so to speak. So the resources aren't such a big thing, but you don't want to wipe them off too quickly as such, because building must go on, so to speak. So we're just a little bit a bit vague about what's going to occur through here. So the 320 here, if the market comes down here and finds this 320 as resistance, yeah, then we know we've got a bear market. If we see 5 waves down, then we also know we've got a bear market as well. And of course, this is going to affect the likes of BHP, and we've got BHP through here. We don't have 5 waves up here for BHP just yet as well. We can class this here, if I just bring in that little tool again here, up for 1 here, back for 2, and it certainly looks like a nice third wave unfolding there, doesn't it? I mean, if you understand the wave structures, if it was an A and a B and a C, the C wave is normally lazier, more of an angle than the wave A here. So this has really got the personality of a third wave as such. So if we get that 5 wave structure there, as I've mentioned before, then we know that we've got a much larger bullish pattern occurring. So then we would see an A and a B and a C across here, and then we would see further upside through there. This distance here would be the same as this distance here, if not longer, if it was going to be a stronger pattern. So there is a lot at stake here, and it's just a matter of working out what we've got here. So we knew that you could buy off the bounce here, but I couldn't, because I knew we're going up, but I don't know where we are within this structure just yet. I know that we're here, so if you'd like to take profit here or above that, that's fine, or even hold a smaller position. If we get the ABC, if we get 5 here, then we'll be looking at this ABC here, and then we'll definitely be moving back in from the support, wherever that may tested support come in on the 34, which is the Fibonacci number, or the 35 here, which is 5 second strongest number in the market as support there. We can go from that point there. So the copper and the materials sector have got like a lot at stake there. So that's that really, end of story. The precious metals are also showing weakness as well. So when we look at gold, for instance, here, we can see that the current move down, I've got it outlined as a 5 wave move to the downside, because when we're looking back, let me go back through here. Okay, so as you know, just going back over old ground here, but it's sort of important to understand, we understood that this is a corrective pattern. What we didn't understand, if we got another little push up through there, which is always quite viable. Same with copper actually. So if we get a clear 5 waves down, then we know that the wave 4 is completed, and we'll be looking for new lows here. Now, this 5 wave structure down through here is not 5 waves just yet, but as you can see here, it's quite possible that it can go into 5 waves. So that would be down for the 1, back for the 2, down for the 3 here in 5 waves, the 4. So we will get, by the looks of it, we should get a new low here, and that will give us our 5 waves, right? But also in reality as well, this wave 3 here can be a C wave. So this can also still be labeled as an A and a B wave to here, and then the 5 waves down for the C wave here. So that's how that can pan out. So an ABC, which is a corrective pattern. So it would still need the 4 and the 5 here to say to us that this is a clear 5 wave structure to the downside, an impulse wave. And once that occurs, then we'll see an A and a B and a C come back up. And then that would be our short position from that point there. So look, it's just falling into place, whatever it may be. We just don't know this yet. So to get our timing right and manage our risk properly, we do need to see this market unfold a little bit further. And of course, silver's in the same boat as well, but silver's more bearish than this market. The oil market as well is pretty much in the same. It's still in a bullish vote as well, because this move here is in 3 waves. This move here is positive, but if it takes out this low here, then it's bearish at that point. So we could say a move under the 93 and it's bearish at that point. We'd also consider it bearish under the 95 here as well. The interesting thing here is stock has moved higher, and oil normally follows stock, but this is not the case. So this market has moved lower, and that may be because of partly because of the higher US dollar, because oil's traded in US dollars. So it may be feeling the pinch on that. There's obviously other criteria that put it in this position as well, but it's a bearish bias once it drops below the 95 there. So unless it can find support back on through here, then we'll be looking at counting a impulse wave structure down through here, but it's not there yet. Everything about this particular structure here says that it's corrective, and it's bullish corrective, and there'll be new highs to be made. But it's not sitting on 95, so it's in sort of exposure land on the risk side of things. Alrighty, let's have a look at Forex as the Euro's been our sort of predominant short, longer term short. Okay, one of the catalysts, the US dollar here is moving up quite strongly, as you can see here, into that wave 3 as we've been mentioning. And also we've got a little retest on the 83 that we're looking for here, so we can expect further upside through here. Normally once support is found on the 83 here, we can be looking at the 85, and that's what we'll be doing, of course, along the way between these two. We've got the 84 there that will put up a bit of a fuss, and also on the intraday level we have other important numbers. So at the moment we're just moving through group 2 here with the 65, the 72 and the 80, so we can expect some sort of resistance here, but looking higher now that we've got that nice retest on the 83 here, and looking higher. So of course the once this had support on the 83 here, that triggered the shorts for the euro. So when we look at the euro here, this is the daily chart, just to get things in perspective here, because if we're on track through here, I might just bring up the weekly here if I can find it. Okay, so this is the weekly chart through here. So look, essentially what we're looking at through here, if everything goes according to plan, is that this here is looking at this as an ABC rally here, and then we're looking at this low being taken out through here. So this would be wave 1 to the downside and wave 2 back to this point through here. I've got it labeled as 2 or B, but we'll consider this as corrective anyway, and then we'll be looking for new lows through here as such as well. But the wave 1 here, is the length that it is, but wave 3 when it comes in here will be the same length as this, or 60% longer. So it's quite a long structure coming in here. Not only that, is that if we look at this on the daily level now, the same wave 1 here and the ABC for wave 2, then the next, so we're in wave 3 coming down through here, and then also the next degree smaller from the minor wave here was a minute wave. So we've got down for minute 1, back for minute 2, and we're going down for minute 3 down through here. And inside 3 there will be 5 waves, so we've got the smaller degree down for 1 and back for 2, and you can see how this bar here has closed lower and has retested the 130 there. So we could say that that's had its first retest, and it's failed and it's weak, and we look at the US dollar going higher, so we can look at this moving down lower. Of course, this trend line support here, which is just from the previous low over here, it's not a huge thing, but it's there, and it'll play its part in the bounce. So just check that out. But the 128 is also the first sort of target area through here. So normally, a market will come down, hit the trend line here, bounce back up, and eventually work through it. But once it comes down, it likes to go back and check. That checking of the trend line is where you would add to positions as well through there. So having a look at this, so basically, get short. Looking at this a little bit closer, this is the yesterday we were looking at this being the 5 waves down for wave 1 here, and we weren't sure about the the corrective process here, because technically it could come much higher up here, but we figured that the 130 and the 150 in this sort of area through here would be, would be reasonable. And we know that the euro can have very shallow retracement levels, and that's what it did. So you really need to be there to put short positions in, and that's why setting up those limit orders. But either way, you need to get positions into this market for the long term if you're trading long term short, that is. Otherwise, you'll just trade all these micro levels through here as such, and that's that. But you can see the potential of this market moving lower through here. So it does need a bit of consideration and planning. Okay, the Australian dollar on the weekly chart here is working through its triangle and E wave here, and we're looking for 5 waves down through here. And of course 98 is the first minor trading level, so I'll just borrow that from there. So 98 is where the first bounce. There is this trend line coming through here, just so you know, and you can track that down in more detail on the 4-hour chart to find out where that is. But the 98 is normally when a market comes through, it will either bounce at 99 and go back and retest the $1, or from the 98. So that's what you need to consider. We should see some sort of retest moving into this particular area. This is the 4-hour wave count that we've got through here. So where we are here is that we are still looking for this wave 3 low here in terms of this third wave here. Set wave 2 here, coming down for wave 3 here, which will have 5 waves in it. The 1, the 2, the 3, the 4, and the 5 coming down through here to make that wave 3 there. So where we are now is we've got the 1, the 2, the 3, the 4, and the 5 in here. And it does appear that there'll be 5 waves in this little structure here just ending as well. So that may be the low just in through here into the 98, sort of 80, group 2 area, 80, 72, and so forth in there. So if I have a smaller look in here, right, so in that little wave structure here, we can see, in this wave structure rather, we can see that the third wave is in the middle here because it's the longest and the strongest. Okay, so we can call this 1 and 2 and 3 into here, the 4 in here somewhere, and then the 5 in through here. So we can start to see some support throughout here. So just be a little bit mindful about shorting it from this particular price point. It's probably not the go. If the 98.72 becomes a retested resistance, by all means move in through that there and take it down to the 98.50. But otherwise we can expect a bounce back up from this point. Alrighty, I think that sort of covers most of it. Resources could get a little bit weaker because of the base metals and precious metals moving down. So we put a short position in for gold yesterday on one of the stocks. So you could probably look to add to those, get a few more, and also add on the long side for the banks. In terms of the weekly bullish cycle in Australia here, Wednesday sort of creates the high today, and then Thursday is the bear day. If it's a bear day on low volume, then we'll see Friday up, and if Friday is up on strong volume, then that will follow through to the Monday, and that weekly cycle continues, and it's been running reasonably well over the weeks. So it's always good to sort of keep it in the back of your mind. It's just take it with a pinch of salt, but it can be helpful. Alrighty, well, good morning, good luck, and enjoy the day ahead.